All right. What's up, everybody? How's everyone doing? Should hopefully be able to see my screen. Yeah, hopefully. Hey, Shirley. Good to see you in here. How's your day been? Good, Shirley. That's amazing. Yo, what's up, Abs? Doing all right, man. Been another busy day here. Dean, welcome. Dave, welcome. Patrick, welcome. Andrew, welcome. Yeah, I'm doing all right. A little bit sore, a little bit tired. Been a yeah. I just feel like I haven't left my office in a month. All right, so who wants to kick it off here with the first question? I know a few people emailed me some questions here, but we'll save those for the very end. Anyone got anything to start with? Any topics you guys want to go over? This is the moment where everything is fair game, right? So obviously try to keep it as trading related here as possible. But who's got the first one? Who wants to break the ice? Yeah, so absolutely. Confirmation. Can you go into a confirmation candle? What is it? How can you find it? Right? Whatever. So I think it's important that we start from the very beginning, right? It's understanding that every trade has three parts to it, right? Has the setup, it has the confirmation, and then it has the execution. So confirmation is kind of the middle part. If we're going to truly understand it, we probably don't want to skip the first or the third. So let's kind of do it all in order, right? Philosophically, a setup is a reason for why you're interested in a trade, right? It's like a moment. That's a good analogy. Like if you were a scout watching a football player, it's someone making a play on a field that makes you like sit up and pay attention, right? So a setup is fundamentally a reason to like sit up and pay attention to the market and kind of zoom in on your area of focus. In our context, right, or in our situation, a setup is an opening range breakout, right? A reversal or a breakout through the high of day or low of day. So those are our kind of like four setup triggers, right? A failed breakout reversal, breakout above the opening range, or a breakout through high of day or low of day, right? So those are the varieties. A setup occurs fundamentally once that trigger happens, right? So if it's going to break through high a day, the setup occurs when price pierces that level. What we want to do here now is then make sure that we're not trading a variety of false signals. You know, if we end up chasing every single setup that occurs, we're probably going to get washed out and take a lot of trades that we just don't need to take. And so that's where the concept of confirmation comes in. Confirmation, from my perspective, is about just defining what strength looks like and how it behaves. So if I'm asking myself, if my setup is strong, what would that look like, right? And the answer to that question is what my confirmation should be. So if I'm doing my setup here is a breakout through high of day, then what would a strong breakout look like? Well, a strong breakout would break, close, and hold above the previous area of resistance, right? And turn it into support. and it would do so on more volume or more buyers or more interested people than we've seen recently. So the way that we can then visualize that price action, right, is with increasing outlier volume and a strong candle shape. So really good example here in today's price action, right? In the afternoon, your setup here was a breakout through high of day, right? Which is this monster mega middle finger candle. And then if we look at that volume profile, right, it's not only closing and holding above high of day, which is visualized as my blue line, but it's also on like way bigger volume, right, than anything we've seen for the last little bit. Now, this was news driven, which is why it created that. But this is fundamentally the confirmation, right, that you'd be looking for. So it's a high volume breakout. It's indicating strength. It's showing to us that our idea appears to be correct and that the path of least resistance here is to the upside. So that's the whole objective there with confirmation. It's defining what strength looks like, making that process consistent, and then giving ourselves a binary, right? If it's going to break, close, and hold above that blue line, but it's on decreasing volume, right? Then no chance. We're not looking for, it's not a valid confirmation, right? It's not giving me that strength. So we want to make sure that we're doing that progressively or doing that with the correct steps. So it's setup, confirmation, and then the final point is execution, right? Once we know that our idea is correct or that the path of least resistance is in X direction, then we look for our entry, we find our stop loss, we work backwards through all those details, and hopefully, right, we can take advantage of the market opportunity and make some cash. That makes sense? Hey, what's up, Mandy? So no, the opening range is automatically created for me through my indicator, right? So the indicator does all this for me. It takes the first candle of the day, it spits out what the difference between that high and low is, and then it auto creates the profit target levels. So I coded this up so I don't have to draw it out manually. You can access that right on the DTR website. There should be a tab there that's like Michael's indicator or something like that. DTR indicator. And if you just click that, it'll take you to the link and you'll be able to, copy it to your heart's desire. All right, who's got the next one? Can we put it into any platform? No, the indicator is specifically coded up for trading views like language, right? Which is called Pine Script. And so, there's only TradingView is the only platform that supports it. Now, with AI and its capabilities, you can take the source code for this indicator, which you can find by clicking the DTR indicator tab. And if you just copy paste that into ChatGPT and say, hey, make me this indicator for X platform, 5 minutes later, it will be done. Yeah, I think this kind of goes back a little bit to the setup, confirmation, execution pathway, right? So you've got two setups, right, to the upside, and you have two setups to the downside. All right, I'll call it 3 and 3, right? So you got three setups to the upside, three setups to the downside, right? So setup number one is the opening range breakout, right? Which looks like, this 944 candle. Setup number two, right, is like this example, which is the high vol breakout through high of day. And then the third bullish example, right, would be like the mean reversion setup, right, or reversal setup off of the lows. To the downside, right, same thing. It's the high vol breakout, right, breakout through low of day. And then if we can find an appropriate one here. Gosh, seems like it's been a while. Something like this, right? It's kind of like a high volume rejection. So now let's define what all three setups are, right? So an opening range breakout, candle opens up inside the opening range, closes outside of the opening range, right? So that's the setup. For it to be A plus, right, it has to have a strong candle shape. So something that looks like this candle, right? And it needs to have increasing outlier volume. So increasing is versus the most previous, like the most recent candle. And then outlier is more than average. Now, more than average, I use like the moving average line here to help me indicate that. But honestly, just like the eye test, does the volume look significantly bigger than the recent volume profiles, right? So that then becomes your A plus standard, right? It's strong candle shape, strong volume profile. That's what makes a setup or a trade A plus and tells you that the idea is strong. And then it's just about the setup triggers, right? So breakout from inside the opening range to outside of the opening range, right? To the upside, breakout through high of day, right? Or above high of day and hold above high of day, right? That's setup number two for bulls. And then setup number three is the reversal. Now, the reversal is the most complicated because it requires a failed move from the other side, right? So a reversal can only occur when you've created a new lower low for the day. So like this example here, right? Like I couldn't call this candle at 10:06 a reversal candle because it didn't make a new low of day. This candle at 10:44, I could call a reversal candle because there's a failed breakout to the downside and then it reverses, right, as a green candle and an arrow pointing up. So an indication that the move is strong, right, is then going to be based on the confirmation standard, which will be the candle shape and the volume profile. And that's about it. We're never going to be 100% with that. We're probably going to be like 60%, 70% of the way there when we see that volume profile. And that's really all we need to be able to hopefully catch some of that momentum. So 3 setups to the upside, 3 setups to the downside. Same confirmation, candle standard, volume profile standard for all 6 setups. And it's just about being deliberate in your definition of them and then just ignoring everything else in the middle. All right, who's got the next question? Let's stack them up. So it's really simple, right? If I'm looking at the daily time frame here, I'm looking at three things in my pre-market prep system, right? I'm looking at the previous day's candle, the previous day's volume, and then what is today's price action telling me, right? So let's pretend that this was tomorrow morning, right? If I were to look at this, I've got a green candle, I've got increasing volume, and I've got a gap up because the candle is green. If today's candle, right, this Wednesday, the first candle was red, it would be a gap down. So all I'm looking for here on the futures is today's price action green or red? If it's green, it's a gap up. If it's red, it's a gap down. If you're looking at it from like a individual stock perspective, right, it's going to show you a pre-market price, and that'll be like 250 or 249 or whatever it is. Fundamentally, a gap up means that the open is higher than yesterday's close. A gap down means that the open is lower than yesterday's close. So definition-wise, it should be really simple, but even easier than that, right? From a market perspective, is that when we're looking at futures, is today's candle green or red? If it's green, gap up. If it's red, gap down. Clear? All right, what else we got here? Any other questions? Oh, you're good. All right, so let's do the revenge trading first here versus deciding you were too early. So revenge trading, right? The difference isn't on the entry, right? The difference is in how you behave once you're actually in the position. So I can be early and try again, and it's not revengeful, but I can also be early, try again, be correct, and still be revenge trading. So what it is, right? Revenge. It's fundamentally when you are in a position or you entered a trade or something has happened in a trade where you go from being a logical person, right, or trading your system to reacting to like the emotional highs and lows of each individual decision. So the reason why revenge trading is bad is not because the outcome is necessarily not because necessarily the direction of your trade is incorrect, but it's because when you enter a position from that emotional state, your behaviors stop being rational, right? They stop being logical. They start being, they start being emotional. Terrible analogy, so bear with me, right? But you always hear about like crimes of passion, right? Where it's like, wife killed her husband because he was cheating on her with her best friend or vice versa or whatever, right? So if that is if that's a crime of revenge, right? That's kind of the same thing that we're trying to avoid when we're trading. We're trying to avoid getting into that like emotional reaction where our state is likely to be compromised based on the previous result. The best way to avoid being able to revenge trade in general, right, is being really deliberate about your risk management. So everyone has a number that breaks them. And if you can force yourself to constantly size down and just honestly just be far away from that number, you'll avoid a lot of those emotional reactions. Now, on the DTR Trading Hub, where I think this is probably confusing for some people, the code there is indicating that if you take a trade within, it's usually, I think 90 seconds, I think that's what it's programmed to. If you take a trade within 90 seconds on the same ticker and the same time frame as a trade where you had a loss, then it's going to flag that by default as potentially revenge trading behavior. Your objective from there is to honestly just be self-aware and honest with yourself of if you think that decision was driven by emotion or by your setup, right? Or by your technique. The way you judge that, right, is how well did you follow your trading rules once you were in the position. If you broke 1 or 2 or 3 or 4 or 5 or 10, right, trading rules, then it's a revenge trade, right? Doesn't matter if it's 1 or 100. If you followed your process, you stuck to your rules, you didn't like compromise any of your trading decisions, then it wasn't a revenge trade. So ultimately, that distinction is like, it's a little bit of a personal question because only you truly know the answer to if it was or not. But historically, from what I've seen with traders or, various people, I've dealt with thousands of traders at this point, is many people don't react very well to a loss. They revenge trade it right away, get an emotional reaction to it, and then they kind of compound that like irrational set of behaviors and structures. So I think that's probably the thing to be aware of. The distinction isn't like, oh, I took a trade 15 seconds later. It's I took a trade and lost control. If I took a trade and lost control because of a previous loss, that is a revenge trade. If I took a trade because my thesis was correct and I was just early and I stuck to my plan, that's just my strategy. All right, Abs. So you're asking if I had 5 hours a day to improve my trading, what would I do? One, I don't think you need that much time. The way that you're going to get better as a trader isn't really in like doing 20 hours of work a day and like blunt force traumaing your way into profitability. It's a little bit different, I think. Trading for me is about like collecting data, right? So every trading day, I'm trying to collect as many samples of market data. And those samples are based off of, the quality of my signals, the quality of my decisions. Was I making rational, irrational decisions? Did I follow my plan? Yada, yada, yada. So my job fundamentally when I'm trading is to collect data. Outside of market hours, my job is to design experiments effectively over how I can collect better data sample sizes or better samples of data. So it's like kind of going back to that internal self-reflection we just talked about there about revenge trading, right? So if I'm taking a trade like today, for example, I didn't have a very good day trading, right? Lost money today. And I'm looking at my trades and I'm going through them. I'm going to ask myself 3 questions, right? Talked about this a little bit on the stream here today, but it's probably worth going over again. I'm asking myself, was it the market? Was it my strategy or was it me, right? If I can answer those three questions honestly without the sting of defeat still in my gut, then that then becomes the starting point over the work I want to do that evening or when I have time, right? So was it the market, right? So does my strategy not work right now? Like, are conditions bad? Did nothing move today? Did I not have any setup triggers, right? There'd be those types of questions. Was it the strategy? So it's like, am I actually trading a strategy? Do I have any evidence that my strategy actually works? Over the last 10, 15, 20, 30 days, like, is my strategy going as well as I want? Better, worse, right? Is it a 1-day sample size I'm looking at, 10-day, whatever? And then was it me, right? Did I do something that I had control over that made my life more difficult? 95% of the time, maybe even more, it's the final option, right? It was me. I did something stupid. I didn't take profit where I could have. I rushed my entry. I ignored my stop loss. I added to a loser. I didn't take profit where I should have. I pyramided too aggressively. I didn't pyramid when I should have. Like, whatever, right? Like, there's a cajillion different variables that might exist there. And your job is to figure out what it was. Once you've isolated what you perceive to be the problem is, your job is to basically test that hypothesis. So if I think, good example here, right? I took a loss that was way bigger than I wanted. I got really pissed off about it and I revenge traded. When I looked at my trading, I noticed that I didn't set a stop loss. And when I wanted to have lost only $300, I ended up losing $1,300. Once I lost $1,300, I was tilted. I was out of control. I couldn't make any good decisions. And so I blew up my account. If I was then looking at that, right, as my trader diagnosis, then I would say, okay, the point where my trading first broke was that I didn't set a stop loss, right? I let a small loss become 3 or 4 times bigger and then couldn't handle that number. And so I started doing something stupid. So if I want to avoid doing those something stupid events, I need to make sure that those $300 losses are $300 losses. So how can I do that? Okay, well, I can set a stop loss and make sure that my next position that I take, I actually set that up and I'm ready and it executes. So then you have a data point, right? You've got something to compare against, and then you can test your hypothesis and see if your idea is correct the following day, right? At some point, you're going to have another trade that stops you out or is a loss, and you'll take that $300 loss. And at the end of the day, you'll be able to say, okay, did I feel good after that? Well, probably not. But did I lose my freaking mind and go into a death spiral and blow my account? No. So then you can say, yes, experiment worked. Amazing. I know what I need to fix, and I can go look at the next thing. And so your job isn't to necessarily become a master of the market. It's to become a master of yourself, right? It's to constantly evaluate the things that could be potentially costing you money, create tests and experiments to basically see if you can find a solution. And then once you get more data and feedback from the trading day, you can make adjustments, create new experiments, and hopefully have a better result the following day. What is the hammer candle theory and what does it indicate? No idea. Never heard that before, so can't comment. So if I'm going to be pyramiding into a position, right? So let's just show it as a paper trade, right? So if I were to enter a trade, let's do market order. And I'm in at 83.75. And I set my stop loss price to be, let's just call it 55. And then I were to buy another 4 contracts, right? So now I buy more. it changes my average price, but my order is filled, right, to manage that same stop loss. So I don't actually need to change anything there, right? That's the thing. What I would do though, however, is then go in and edit my stop loss price to be better than what my average fill price is, right? So in this circumstance, I would then post pyramid, edit my stop loss to be, let's say 85, right? Confirm, and then, hey, it just stopped me out and it closed my entire position, right? So your execution platform is smart enough to be able to do that. You just have to go in and edit your order once it has been filled. Make sense? Yo, what's up, Logan? Good to see you. Any other questions here, team? Any other questions? What do we got? So good question, Logan. Not super good advice, but man, suck it up, princess, right? Like you're going to miss a million trades. And the reality here is that you're not one trade away from being rich. So why do you care if you missed it, right? Like it's not going to make or break you. So why are we putting so much emphasis or like ego or validation to that? And yeah, like it sucks. It's not super fun, but it is one of those things that gets like easier with time. The thing that I would focus on, it's like, I mean, I get pissed when I miss entries. Like you guys hear it all the time. But I think like a big thing here is that it's like, it's okay to feel these emotions in the middle of a trading day, right? But just because I feel something doesn't mean it's true, right? So if I, it's going to sound stupid, but if I basically default into thinking that every impulse and idea and thought that rattles around in my head during the trading day isn't designed to make me a better winner, when I get pissed off at that, allow myself to have that like little release, and then you can kind of snap back into it and like kind of trick yourself into realizing how absurd it is that you're pissed off about a couple pixels on a computer screen changing color that you're not a part of, right? Like when you really break down the scenario, you realize how absurd it is. And yeah, it's like the same way. Like I'm going to have a million losses over the course of my career. I'm going to miss a million trades here too. I'm generally not going to beat myself up about that. The other thing that you can start doing here, right, is because I think a lot of those issues like come from a state of FOMO, and people tend to only feel bitter about missed trades when there are trades that they would have made money on, right? No one seems to ever feel bitter or annoyed or mad about missing an entry that would have stopped them out, right? So I think that that's what highlights to us in our brain that it's like a outcome driven self-reflection. And if you really want to fight back against that long term, like the thing to do is start to track, actually the results of those trades, right? Like, what are the ones where you missed your entry, but it would have been a stop loss on? Like, force yourself to remember that and basically reestablish balance in your irrational lizard brain. That makes sense? So, Crystal, I'm not sure if I totally understand your question, right? How much of a buffer do you recommend building up on a funded account? Not dollar amount per se, but number of red trade / days based on risk tolerance. So you can't really answer that question without it being a number, right? Because fundamentally, everyone has a number that breaks them, right? Which goes from being rational human to irrational. And so it all starts with whatever that is, right? In your circumstance, maybe the max loss that you can tolerate in a day is $1. Maybe it's $1,000. Maybe it's $10,000, right? No idea. Your job is to figure out what that number is and then work backwards from there. So if you can't tolerate, let's say, $2,500 worth of drawdown, or 50% of your drawdown approximately on a 150K account, then you want to be sizing your position so that 3 or 4 days of consecutive losses still isn't getting you to that number. But you kind of have to reverse engineer that yourself, right? Where it's like, okay, statistically, or here's the evidence I have of where my trading has gone astray in the past. Here's what that is. I don't like how I feel when I trade like that. So let's work backwards from there. What else we got here? Yeah, Mandy. So an inside bar is just a candle that is fully confined inside the previous day's range, right? So an example here would be, you can zoom in here well enough, is this Wednesday, March 26th, right? You can see, I mean, your better example, the 26th, right? You see Monday's range is between 24,790 and 23,775. And then Tuesday's high, right, is 554 and Tuesday's low is 146. So the high is neither higher than the previous high and the low is not lower than the previous low. So both or all of the price action is inside the previous candle's range. So that's what's called an inside bar. Well, an inside bar tells me consolidation, right? So it gives me an indication of what like the general theme of the market is, right? The whole point of my pre-market plan is to help me determine how strong the trend is. And if price action is fully confined inside the previous day's range, I can't really argue that the trend is particularly strong, right? Anything else? What else we got? The abs. I think I answered all your questions from your email. Mandy, I think I answered your revenge trading question as well. Anyone got anything else for me here? I don't think there's anything I haven't answered from email here yet. I'm sorry to hear that, Norman. Wasn't a fun day for me either. Shit happens. That's trading. What else we got here, team? What else we got? Any tech questions? Like, please, guys, don't save them for the live stream tomorrow. I mean, honestly, Ron, I'm not super good at cutting my losers early. My version of cutting my losers early is getting my really tight risk, right? So I'm pretty much always happy to lose 10 points. Never happy to lose it, but like if I'm going to lose it, losing 10 points, like it's pretty good. So that's kind of like how I create those scenarios, right? Now, generally, if I'm not green right away, probably I'm not going to get the tremendous amount to follow through, but that's like a little bit anecdotal. So for me, the thing is, I manage that risk, I guess, by getting really tight stop losses, right? 10 points on NQ should happen pretty quick. So that's kind of how I protect myself there. Yeah, when was the last time you tried, Adrian? Just before I went live here or this morning? Okay, we'll take a look. Been working on stuff all day here, so I'm working on it, guys. But yeah, bear with me. Doing my best. Yes, there are tutorial videos directly on the web trading platform. You can find them there. You also YouTube how to use Volumetrica. I'm sure you'll get a cajillion options. Any other questions here, team? Any other questions? Any other questions here, team? Any other questions? Honestly, I haven't checked the market calendar here yet. If the market is closed, then I will not be trading. I don't know if it's a religious holiday or not. I have no clue. But you can check market holidays, right? Those are publicly listed. Go look up CME market holidays. You'll get your answer. All right, guys, final call for questions here. Final call for questions. Mandy, did I hit everything from your emails? So not sure if I understand your question. FDHD8X. Sound like a password. So for managing psychology, I believe you heard you say you win, like 50% of the time. However, when you win, it's 3 or 4 times greater than losses. Is that your rule of thumb? It's not a rule of thumb. Those are just my stats, right? So like my win rate on the 2026 is like 56%. and my average win is like $2,200 and my average loss is like 670 or something like that. So it's just what my stats are. Like, it's not a rule of thumb. Everything I do is about trying to keep those losses as small as possible. Like, my average loss on the year is just under 8 points. So that's what makes it easy for me to win, right? If I'm trading NQ and today it's almost at 24,000 points, and for me to be green again, I only need to be 9 points up, right? For me to be 3R, I need to be 24 points up, right? Like, do you know how easy it is for me to get a 0.1% move, right? A tenth of 1%. Actually, it's even less than that, right? It's 1/100th of 1%. Like, it's really easy for that to happen. So all I'm looking for here is to create scenarios where it's easy for my math to work in my favor, right? So it's not a rule of thumb. Those are my trading statistics, and they exist because everything is optimized for losing as small as possible. Like, I don't ever particularly target a max size win. Like, I don't, I need to get 12 points on this or something like that. No, just let my system play out. I can't control that necessarily, but I can always control the size of my next loss within reason. So just all my energy, all my focus, all my, I don't know, neurotic energy goes into that. Any other questions here, team? Like, just to add to that, right, Mr. Password, eventually you build up enough stats in your trading where you start to get like a benchmark of what you're capable of doing, right? So, I've been trading like this strategy, let's say, like, really, like this exact same execution, the exact same stop loss, whatever, since like about August. So from there, I've got now August, September, October, November, December, January, February, March, right? I got 8 months. Yeah, 8 months. Christ. 8 months of stress tested data, right? So I know like what reasonable performance is over that time period. And so, like, if all of a sudden, from now till September, my average win becomes 12 points and my average loss becomes 10 points, I know something is broken and I need to fix it based on my historical context. But I would hope I'd catch that before then. But you just never fucking know. Yeah, I'm far from that. All right, guys. Any other questions here? Any other questions? Final call here. Final call. All right, everybody. Well, if no further questions, then I'm going to kill it here for the day. We'll do another one of these on Thursday. And then just remember too, guys, right? The last like 45 minutes of every stream, unless I'm like, really grumpy or whatever, question period 2. So let's not cry over spilt milk, right? We're getting something like 10 hours of dedicated question time a week. A lot of time. So let's make sure that we're taking advantage of it, and we don't need more stuff than that. So appreciate everyone. Have yourselves a great rest of the evening, and I'll see you guys tomorrow.